We are with Adrian Day of Adrian Day Asset Management here at the New Orleans Investment Conference. Adrian, so nice of you to be with me today.
Well, thank you. Nice to be with you.
So Adrian, you're here to tell people a little bit about the resource sector.
Right.
Tell us a little bit about what you'll be speaking about tomorrow.
Well, the theme of my talk is the resource boom over? And the answer is no. There's a lot of people that have been talking in the last several months about the fact that the resource boom that we've enjoyed for the last several years is over. China's slowing down and so on, and gold's in a bubble, all that sort of talk you hear about. And I think people are absolutely missing the point that the resource boom based on China's demand is a long-term story. And if you look at commodity cycles in the past, what we've had is 9 years in the base metals, 9 years in most commodities. That would be the shortest cycle in history. Commodity cycles tend to be long. And so I think we've got a lot ahead of us. And it's not just demand from China, it's also the fact that commodity producers are simply unable to keep up with the demand from China and other places.
Okay. But when you speak about resource boom, do you touch upon about new gold mines being found as well?
Well, of course there's new gold mines being found, but the interesting thing is we always hear about the new discoveries and the new mines. We don't hear so much about the older, mature mines that are depleting or even going out of business completely. But if you look at gold production for the last 10 years since gold bottomed in 2000, it's only been the last couple of years that gold production has moved up, and it's moved up by a very small amount. But for the whole 10 years of a boom, as gold went from 250 to 1200, gold production was actually going down. Look at copper production. We had record prices last year, record demand from China, and yet production went down. Now, why did production go down? It's either a conspiracy, which I don't believe, or they're simply unable to increase production. And they're unable to increase production because most copper production comes from older mines. Older mines are much more susceptible to problems. We've seen that this year. We saw it last year with several mines in Chile having problems and having to shut down for short periods of time. But that affects the production. This year again, production is going down.
There was actually a good question brought up in one of the sessions yesterday, and how many places can we actually mine without there being problems, political problems, or big mosquitoes, or just geographical issues?
That's another question. I mean, you've got to look at, there's two sides to production. One is simply the physical, the geophysical, the geological. Is it there? And can we get at it? And can we get at it economically? That's one side. And then, of course, the other side, as you mentioned, the political problems, the environmental problems, the social problems, they're just getting worse and worse and worse. And what they're doing, and of course, governments see a golden egg and want to tax it. So it's not so profitable anymore. So people are very selective about the places they want to put their money. A lot of people don't want to go to Russia, period. A lot of people don't want to go. There's other countries, other people just plain don't want to go. But in addition to that, what these social problems are doing is they're just making it longer and longer and longer from the time you make a discovery to the time you can actually start producing.
So overall, Adrian, what does this mean for you? What does this translate when we're looking at the price of gold?
Higher, of course. Higher. Yeah, and probably significantly high. Now, gold is a little bit different from the other metals, of course, because it's a monetary metal as well. So with gold, the biggest determinant is how do people feel about the purchasing value of their own currencies. And I don't think people feel very good about that right now, whether you're American or European or Chinese for that matter. You've got 6%, more than 6% inflation in China right now. Economy is slowing a little bit. I'm not concerned about that, but 6% inflation is quite high when you're not earning 6% in the bank.
Okay. But Adrian, when you say higher, can I get you to give me a price range?
It's really difficult because I think it's very difficult to estimate prices for gold, frankly, because it really is a matter of how low does the dollar go rather than how high does gold go. But let's put it this way, if gold is at 2,500 towards the end of next year, it would not surprise me in the least.
Adrian, you're here for another reason. You'll be moderating a very interesting panel tomorrow. Mark Faber, Dennis Gartman, Frank Holmes. How do you manage those three?
Yeah, you don't. You just ask a question and you let them have at it. Frankly, that's a very difficult panel to moderate. They're all stunningly, they're all intelligent people with a lot of very interesting things to say. But if you look at the global situation today, we've got a lot to talk about. We got Europe. Have we really solved anything in Europe? I'm going to ask the panel that, but I don't think we have. I think this is, the 50% haircut that the banks agreed to take is probably more than I thought they were going to, so it does give us a bit of breathing room. But does anybody seriously think that Greece is going to run a budget surplus this time next year or 2 years from now? No. China, the other big question is how slow is China's economy going to go? Is it going to be a hard landing or not? I personally don't think so. I mean, we've had inflation, we've had growth go from 11 and 12% the last few years down to 9% this year and 8% projected for next year. But 9% is nothing to get particularly upset about. So I think people are overreacting to the China slowdown. And if you look at very short-term indicators, we've had manufacturing decline for the last several months. But interestingly, we've had the purchasing index go up in the last couple of months. What that suggests to me is that the manufacturing has hit a bottom. Now we're going to start moving up again. You look at imports of commodities into China, they're moving back up again.
All right, Adrian, final thoughts for investors watching us out there today. What are you looking at these days?
Oh, Lordy, we're buying across the board, frankly, because things are so cheap. We've been very, very aggressively buying European stocks recently. People are, don't you know there's a problem in Europe? Yes, I know there's a problem in Europe, but you buy when blood's in the streets. We're buying stocks in Europe selling at 10 and 11 times yields, selling at 50 and 30% of book value, trading at 3 and 4 times earnings multiples. Good quality companies, that's a huge cushion.
Okay.
Yeah.
All right. Huge cushion. Thank you, Adrian.
Okay, thank you, Daniel.
Thank you for watching. You can stay tuned to Kitco.com for more coverage from the New Orleans Investment Conference. For Kitco News, I'm Daniela Cambone.